All right, Sam, I always start off with the same question, but I think it frames things nicely. How did you personally fall into franchising? Whichever one you
I
have.
mean, is stumbling into franchising a good answer? No. I'm what they call, and I've kind of coined when I talk to folks, I'm a recovering banker. So I cut my teeth coming up with a bank here in Texas. And so I was always at the end of the road in franchising, the last guy to get everything pulled together. Not that it wasn't an important piece, but, I'd always worked with small businesses. And so it kind of migrated into this, consulting side of things where here at Tenet, it just made sense. It allowed me to kind of grow and be a little more active. Now, where being in banking and being on the financing side is fun, you're limited in what you can and can't do. So it's fun to help people, with my background and navigate the path, but to be a little more open minded and creative in what we can do. And so here I am after, a decade plus of SBA lending, commercial lending, all that good stuff.
So when it comes to standing out with franchise brands and franchisees, how do you guys differentiate yourself in a somewhat crowded funding marketplace?
Sure, great question. We're all going to say the same thing. It's relationship based, but it's also identifying, the Nicks and Sams. What's the difference between them? Each person that walks in has, a different idea of what they want to do, whether that's a particular brand or a particular path in their project, or just risk tolerance. You may be much more aggressive than I am, or you may want to utilize your funds more with one of the products we offer in the ROBs and accessing your 401k, whereas I may have more of a tolerance to take on more debt and to explore those avenues, particularly SBA or a non-SBA lender, or something to do with equipment leasing, et cetera. So I think the way we stand out is we start by listening. It starts with a conversation. And where that conversation goes is we give you options. We'll certainly give you our feedback from our experience. We have a lot of experienced folks around here who've been around small businesses and particularly franchising for a long time. But we want to give you the information to make an intelligent decision. And we'll be there every step of the way.
So when it comes to franchisees, and obviously they're the ones that are going to be the primary ones trying to secure financing. I think back to the day before I got into franchising. And if you'd have said, Nick, day before you got into franchising version, what is franchising? I would have said McDonald's. I had no clue what this is. Now, I understand how business works, but even a Rob's loan might be something that to someone that is at the entry level stages to franchising, they might not even know where to start.
Sure.
So, we've seen it. We had a brand on Fox and Friends all 3 hours yesterday, and they get franchise inquiries, and they say, "Wow, I want to own one of these." And it's like, but I don't have $2 million to invest. Well, sure, but most people aren't going to say, I have $2 million cash, I'm going to invest it into a restaurant. They go through a process of securing some financing so that they can pay it off over time and use other people's money to build their investment. With all that being said, when you get a hold of a candidate that's ready to go through this process, if you said, do you understand how franchise financing works? Do any of them have a clue when they get to the starting line, or is there so much education that has to go through that relationship building?
That's a great question. You kind of teed it up there for me. It comes across the board. A lot of folks that we have, this is a progression of their life. This is a kind of a second career. They've had experience somewhere else, and so they have an idea of it. But I think it's kind of, it's like the glacier effect. You see the top of it, but you don't realize the depth that goes into it. One thing I'll say is you don't have to be an expert. You kind of touched on it on the bottom, at the start of your question. There's so many different pieces that can go into, that $2 million. And don't be scared when you see those numbers out there. because it's going to come from a variety of different places. And, like you said, a Rob's is your own money. That's an equity transaction to where we can help you move your funds and access that. There's always, what you have saved in your bank account. No bank's going to turn you away, or no franchisor is going to turn you away if you've got the cash in the bank account, but that's sometimes limited for individuals. The beauty of franchising is it's an out of the box concept that allows you to, kind of follow a playbook. And that's where the appetite for lenders, and particularly in small business lending and SBA, there's usually a path to be able to get you a loan to help bridge that gap. Really when we're talking to folks about starting a new business, 20% down or 20% of that 2 million is a good starting point. Is there ways you can massage it in to go down a little bit or go up a little bit? Yes, but then the rest of it can be funded with a small business loan, particularly SBA, the Small Business Administration. And so the education comes to show how these parts come together to make the whole pie. They're pieces of the pie. Some pieces are bigger, some pieces are smaller. But as long as you start to hit these, kind of checklist marks that each one of the parties that would be, investing in you to invest into the franchise, there's usually a path. We try to just be transparent with folks and say, hey, here's what you're going to expect if you go down the debt path and talking to bankers. Here's what the minimums you'll have to hit, whether that's in your personal credit history with the credit score, whether that's with what funds you'll need to access from your personal savings and or the ROBS, which is the rollover of business startup and accessing your retirement funds. Or if you have a group, you talk about the $2 million mark. Sometimes there's, a couple different families or a couple different friends to get together. And the questions come across the board on that. We're here to help guide you, but just know there's different pieces to put together to make that whole pie work.
I mean, everything you just said, I think, is fantastic educational background for the franchise buyer. I've said this to a lot of our franchisor clients. This is probably an element that needs to make its way onto franchise development websites, because we don't talk about financing. We don't talk about what you need to have to come to the table really to own a franchise. And frankly, take the example that you were just giving, 20% down, let's say on 2 million is a high net worth individual. It tends to be. Let's call it a $500,000 investment. I like to say to candidates, make sure you can afford 3 of these. If you can't afford 3 of them, you're going to limp into franchising, and you're not going to, the likelihood of you building the wealth that you desire becomes less and less, especially if you're financing, because you got to pay off those loans before you start making money. I've looked at brands. We had a client who wanted significant growth, like every franchisor does. And I looked at their payback period, and it was north of 6 years. Mm-hmm. So that's a tough investment, especially you want to sell like you're a big boy, but your investment, the strength of your ROI is not as good. And so all these things, whether it's the financing you need, the strength of the investment, the scale, and the desired outcome that you want for you and your family, nobody educates this on the front end. They wait almost far down the pathway to the only place that you're getting this person is if they've actually turned into a candidate. What's the opportunity before they even become a candidate to help prepare these folks to understand what they could even buy?
I think that's a very good point. And it's one of the things with, our consultant team that I've been pushing is, and really as a company, the ethos we want to have is to get in front of the franchise development teams, get us involved early. If you hit a gray area, I think everybody knows what a good candidate is and what one that's probably not going to work out. It's in the gray is where, the work is to be done. Get us involved early. You don't need to be the expert, and we're certainly open to sharing with you how we're going to go through our process, our pre-qualification process. It's not that we're trying to hide things or anything like that. We're very open. So to your point, get us involved, get your your financing partner involved. Know the key questions. If you feel like you keep hitting, the same wall each time, Well, let's go through the whys and try to answer those, the whys and the how we can correct that to make sure it's something either that can be overcome or that you can identify quickly. So, the goal of that franchise development person is to identify good candidates and get them to grow the brand. And that's where we can be a resource in providing either material, or if it's one where you feel like it really needs an early introduction, sure, let's go ahead and get that taken care of. But I would tell and preface it for those that would be watching this, don't feel like you need to be an expert. That's what we're here for. And picking up the phone or shooting a quick email, you're going to get a response, and hopefully that gives you a scenario that you can implement each time as you go through, and maybe that makes you more successful on your pull through on getting candidates in the door that are good, viable for the brand.
Is the back of the napkin number 20%? Is that?
I think that's a good way to put it. And we talk back of the napkin, and that's a lot of what I do is when we get in that gray area, what's the back of the napkin for a startup, or some resale teams we work with in brands. What are the cash flow coverage that we're looking at in banks, just to give it a quick look-see. But yeah, that's kind of like a sliding scale. I refer to, I played soccer back in college. You have your ACT score you have to hit, but if you have good grades, you can get a little lower than what the other guy has. But if you've got somebody that's got some good outside cash flow that's going to be appealing to the bank, that's when we start making the argument. The SBA minimum is going to be 10%. That's going to be reserved for your very established brands and very high performing, good experience, outside cash flow, outside net worth individuals. But 20%, if you use that as a good starting point and a good qualifier, you're going to get most folks that can make that happen, unless they just have something absolutely where it needs to be addressed and not going to be able to get over it with the bank.
Out of curiosity, just from an opinion standpoint, I've always thought and found it interesting that franchising really runs opposite of economic conditions, meaning things get tight and people's jobs become riskier, then the likelihood of them buying a business increases. So franchising actually works opposite of the economy. Does lending work alongside the economy? So next year, which most likely will have some turbulence because it being an election year, does financing tighten up, or does it loosen up because more people are interested in jumping into it?
Ooh, I love this question. I'm going to give you two answers. One, kind of how our business works. First answer I'll give you is you think back to the last kind of downturn when we had the correction in the market with the mortgage crisis. One of the biggest things Derek Skosberg, who is our owner, talked about is he goes, that's the busiest time I was in my life. And really what you get is there's the uncertainty, either the job or individuals that have, they see the writing on the wall and they go ahead and they're proactive in making that career change. And so that's when we see a lot of our ROBS activity where folks are pulling out their retirement. It's not performing like they want to. So they're going to bet on themselves and go hang their own shingle with a franchising concept. So we actually have seen kind of an uptick as the market's changed a little bit, and it's skewed more towards individuals using their own funds through the ROBS product as the markets have turned a little bit. The other, on the banking side, I think you'll see where banks will be a little more critical. There's, they're not going to overlook the one small thing as much. They're either going to want a pretty good explanation. But remember, and if you're thinking from a banking standpoint, the SBA product is a highly attractive product on a balance sheet of a bank. It is 75% guaranteed, sometimes less if we get into other products, but it allows banks to show a safer asset on paper. So SBA actually runs kind of what you're talking about in franchise, counter to what's going on in the market, but it doesn't necessarily dip when the market is good. So SBA is a very attractive product, and a lot of banks push more of their relationships that are eligible that they may have done on a conventional commercial basis to the SBA product because it carries that guarantee from the government. So I would say we'll see that it picks up a little bit, but at the same time, banks are going to be asking questions if somebody has a little bit of a hickey in their past, and make sure that they can get over that.
If I'm hearing you correctly, especially for emerging brands, thinking about what you just said, if SBA ends up being a stable option for financing, brands do need to go through the process of getting SBA approved, right? So they
Sure.
should be thinking about this now to almost prepare for 24.
I know that the biggest thing was the change of the SOP on the first and the franchise directory going around. I know I've talked to a lot of our lending partners, and they're defaulting back to the Fran data. That's what we used to do back before the franchise directory was there with SBA. I will say this: the scare is not there that franchising won't be available with SBA, but to your point with emerging brands, Rob's is going to be very, very critical for those types of clients right now. A lot of the lenders are looking for some guidance from SBA on the update on the emerging brands. But if you dot your I's, cross your T's with your FDD, and then getting your information shared with a group like Fran Data, to which the banks are going to be looking to for resources on that type of things, I think you'll be okay. And we do have a couple lenders that are working tirelessly to make sure that they have the system set up for these emerging brands and reviewing their FDDs. I think, though, just making sure you're proactive on that front will go a long way.
Love it. Sam, anything else you want ghost candidate, someone that's watching this, to know about your guys' business before we sign off?
Well, we just try to make it simple, transparent, and honest in what we do. And I would tell folks that are on the fence right now, just start with a phone call, start with a conversation. That's how we start all of our business, whether it's one of our franchise partners, small business partners, or clients that are calling in, want to discuss a deal. You name it, we probably financed it at some point because we're across the country. But let us know what you want us to do, and we'll provide you with the information and the different paths for your situation that are tailored to your needs. And we're there every step of the way. There's no right or wrong starting point. It's just getting started and getting your information over, and we're there to help.
Sam, I appreciate that. I'll say it again. I think anybody that's considering buying a franchise, almost before you get to franchise consultant or franchisor, having a good grip on how much can you actually afford. And again, from my rule of three is always look at something less than where your dollars pull right directly up to. Look at something where you're going to have some working capital or some rainy day capital, because I think it goes a long way when it comes to scaling a franchise. So I think anybody that's watching this should reach out to you first, then think about the franchise that they're thinking about buying, unless you're already obviously in franchising. So Sam, appreciate you sharing your story. Another episode of Meet the Supplier. Look forward to staying in touch. Thanks, Sam.
All right. Thank you, Nick.